We're starting to reach the end of the first day of Introduce Days. But before that, we have the pleasure of welcoming Christian Sundin, CEO of FORMPIPE. Me, myself, I am Simon Granat. I work as an equity analyst at ABG, for those who don't know me. With that said, I'll leave the word over to you, Christian, and please go ahead.
Okay, thank you. Yes, as Simon said, my name is Christian Sundin. I'm the CEO of FORMPIPE Software. FORMPIPE Software is a quite naturally a software company listed on small cap in Stockholm. The agenda I have planned to cover for today is first just a FORMPIPE at a glance. For those who has not heard about us before, I will make a short introduction of what we do and what sort of things we help our customers with, but also some financial overview of FORMPIPE. And then go in a little bit on our offering and the market we are addressing. And then the most interesting phase of today is the transformation to SaaS, software as a service. You will hear me mentioning recurring revenue and SaaS quite a number of times today, and that's sort of the most important thing to take out of the session today. And then a short glimpse on entering the next phase of FORMPIPE history. What we've done recently is reorganization in order to utilize our resources in a more efficient way, and also make sure that we really are using the momentum we have in the SaaS transformation and the partnership we have with Microsoft. So those are the four areas I'm intending to cover during today's session. Starting, going back a little bit then, who is FORMPIPE and what do we do? Yeah, we are a software company within enterprise content management, ECM. Nowadays also called content services. If you talk with people like Gartner, they have renamed it, mostly due to the fact that software as a service, and then you're talking not as much products as services. So that's the same thing if you stumble over the content services thing, that's also us. In a very simple way to describe enterprise content management is that we provide structure and efficiency in digital information, making the most value out of all the digital information businesses and organizations have in their daily work, and which truly is an asset. And even simply described, we are like the ERP systems, but for words instead of numbers. So making sure that you have the words in the right place and you can find it, and that it's the right information you read and not something old or something that doesn't add up. We're present in the markets of public sector in Sweden and Denmark, which is also where we have our heritage. A lot of it comes from the diary of and that public registers of Sweden. So starting from that, the core, where regulation has been the driver for governments and municipalities to make sure that digital information is stored in the correct way. So that's where we have our heritage, and then we've grown from there. We also have a quite substantial part of our business in the private sector nowadays, mainly through partner network all around the world, and that's what I'm coming back to on the Microsoft partnership and the partners we have supporting that part of our business. We are approximately 230 employees today in Denmark, in Sweden, in UK, US, Germany, and in the Netherlands. We have most of our product development offshore through a partner in Ukraine. We have all the product management in the Nordics or in UK, but we have a very efficient production setup where a lot of the coding is done, and we can scale up and scale down on the development resources in Ukraine. However, we have very rigid control over it in the process, and we consider ourselves being very efficient in getting new modules or software out on the market with short time to market on that with the setup we're having. We're quite a small company. In 2018, we had a turnover just about 400 million Swedish, but 233 million out of those 400 million are in recurring revenue, and that's our pride. That's the part of the business we want to grow. We actually want to reduce the 406 if we can and get an even higher number on the recurring revenue. So please consider us as a 223 million company, not a 406 million company. The recurring revenue grants for the stability we have in our business, that more than 50%, as you can see, of our business is recurring revenue, money in advance, coming back year after year, and we have a very low churn in our business. When our customer has bought our products, they stay more or less forever. They rather increase their investment in our products because they see the benefits of it, and then they buy more. We had an EBITDA margin of about 25%, and today the market cap is 1.2 billion in Swedish. I will nag about the recurring revenue, and as you see, the recurring revenue is growing, and it grew by 14% last year as well, and we continue to grow the recurring revenue, which is the main compelling event for actually believing in FormPipe, bring stability. Going back to what we do for our customers and enterprise content management, it's not rocket science. It is a matter of storing your digital information in a way where you can actually find it and be sure that you act and read the right and the latest version of every document or decision you have made, and that you have traceability in all changes on those documents. So even if a case of 100 different documents has been altered with 20 new documents, and those documents has been changed 1,000 times each, you can always go back and see who made what change to this document or this case, at what point and with what reason, and you have complete traceability and auditability of whatever decision you have made or documented. Meaning that no one in an organization that has a structured way of handling their business important documents will act on the incorrect information or an old version of a document or instruction. Neither will you spend a lot of time searching for a document in a lot of folders where is this the latest version or is that the latest version? And everyone that has worked with Windows Explorer and tried to make a folder structure, they realize they make a great looking folder structure. Oh, here's the April bank things and there's that and that. And then the folder tree just expands. And after a while, you realize this folder tree is just impossible to use. Let's make a new folder, old, and then you drag it all into that, and then you actually destroy a lot of digital value in your organization. That is structured capital that will no longer be used, and you will start over again, and you will not use those old documents. That is not a way to be sustainable in the future. That is not a way for businesses to be competitive in the future if you treat your digital information that way. Digital information is way too valuable to be handled in that way. That's the reason for having a structured way of handling your digital information in both governments and in corporations. And that is what this is always trying to describe. Data comes in, it's whatever format, we transform it to whatever format the source want to have. You have records management, which is traceability. You have document management, which is actual logic in documents. You have a naming standard. You have collaboration, you can send documents around. You have workflow, you can approve documents. You make sure that the document is in the right version, right approver has approved it. And you have web content management, it's actually publishing the documents to internet or intranet or wherever platform you want to publish it on. And you can distribute it in whatever format, also in paper if you like to, out of the system. And then you have preservation or long-term archiving, which makes sure that you can read your documents 50 years from now when neither FormPipe, Microsoft, Oracle, Adobe, or no one else that we know today is no longer around. But you can still bring up your document, you can read it, and you can put it in its original context. Not only read the document, but you know which other document it belongs to and which other decision it belongs to. That is preservation for real, and that will never be possible if you store your documents in just a folder structure somewhere on, even if you do it in the cloud. So this is the value we provide to our customers. The market is stable but growing. Gartner and such likes forecast a global 11% growth annually. Sweden and Denmark, which is our front runners in this, we have a lower growth because we've come further, especially in the governmental side. So 7-8% is the forecast in growth on ECM on that. And the structural drivers has so far, to a very large extent, and that's why public sector are the front runners, been regulations. But you all heard about GDPR, for example, that has made a huge push on these things also for corporations, making sure that if you have a lot of unstructured data on a file share, yeah, you are in a violation of GDPR for sure. If you have a structured way of handling, you will be on top of that and make sure that you're not violating GDPR. FORMPIPE'S offerings, yeah, we have sort of 4 areas of products. We have the case and document management. That's very much what I described on the previous picture. We have the structured data archiving, was what the preservation I mentioned. We have grants management, which is sort of a way of using case and document management, but for collecting grants. For example, we help the farmers of Denmark to get their EU grants on time and automated. And Denmark is actually the only country in EU that pays out the grants on time, and that actually has an effect on the GDP on the country of Denmark because it's so massive amount of money. But you also see that it's very pink, so it's very consultancy intense. So it's not really our preference to have that as much consultancy as we have there. We are trying to push that to partners instead. So that will be a decreasing part of our business. Then we have customer communication management. I will come back to that. That's input-output management, and that's where we have the biggest drive on the SaaS transformation with the Microsoft partner network that we, and especially in the cloud. So, and very interesting case with that. Having said that, now you must wake up if you have not listened too carefully to me for a while, because this is the big thing, the SaaS transformation. We've sold our products as SaaS for more than a decade. We had, I think, back in 2006, we had 8 million yearly turnover on software as a service. But the market has not really been ready for buying software as a service. We've offered it, but no one has really bought it. Something really funny happened in 2017. That was Microsoft launched their ERP platform in the cloud, the Dynamics platform. And all of a sudden, all customers want to buy this, our software and other things in the cloud. And it seems like the entire market has realized that the cloud strategy for for being able to reach and work with my documents, my digital information, is the future, and we need to address it. So this is the ARR for our recurring revenue on SaaS alone. And as you can see, the growth is quite impressive. So going into 2016, we had a run rate that has been stable from 10 million yearly on SaaS revenue. When we went out to 2018, only 2 years later, we have 40 million in annual run rate on SaaS. So of course, this is a paradigm shift in the market and how customers buy software. They buy software as a service. And this is all in line with our strategy. We've prepared for it for a long time. We've really pushed these sort of way of charging for our customers, regardless if it's in the cloud or if it's just renting a software. But now the market they really want it and want it for real. They want it up in the cloud. For all, it's decreased risk in our business to get a greater part of our revenue as recurring. But of course, in the short term, that makes us not getting the upfront fees for traditional license. So that is pushing our margins downwards. So it's a short-term negative effect on sales, margin, and cash flow. And this is rolling 12 months of traditional license compared to SaaS. As you see, rolling 12 months here, we've been up to like 75 million back in 3 years ago on traditional license. That, to a large extent, goes right down to EBIT for us, because it's just a software license we sell, and we then get paid for that software license. Since people now buying at SAAS, we don't get that upfront fee at all. So we're now trending down to below 40 million on traditional software license. That means that the 35 million in between there, that goes directly to our margins and pushing our margins downwards. Despite that, we have, during this phase, been able to improve our margins. So we've, in parallel with this pressure this puts on our margin, we have still been able to increase our margin. I mentioned earlier that we had 25% in EBITDA 2018, and here you now see 16%. And that's not me messing up with the numbers. It is the EBITDA adjusted you see here, because we think that's a more relevant number. That's the cash flow. So we're actually putting back everything that has been activated for product for R&D. The accounting way that you put the cost of R&D you put to the balance sheet and you depreciate. Here I've pretended that we are not allowed to do that, and I've taken it all as cost. So here all R&D are in as cost. And that's where we go to these lower. So EBITDA adjusted is not EBITDA, it's EBITDA less activated own work for R&D. But we still improved it quite significantly over the last couple of years, despite the push on the margin that SAAS gives us. And despite the fact that we are strategically lowering our consultancy revenue because we want to push quite, even if it's profitable, we do not want to have more consultancy that we absolutely must have in order to support our partners and make sure that we do not lose out on software deals due to lack of bandwidth. But apart from that, we prefer our partners to do all installations of our software in the market. So from that perspective, and that's why I want to repeat it again, look at us as a 223 million company rather than a 406 million company. It's only the recurring revenue that we want to grow. The other parts of our revenue we actually want to take out and thereby match that with less cost, meaning a more risk-free company and a more stable company. And that's, of course, the whole idea of this. And the curve here indicates how much of our fixed costs, and what I mean with fixed costs, that's salaries that you cannot swiftly get rid of. We cover with our recurring revenue, and we've now gone to that we're up to 80 to 83% of our total cost for property, salaries, and all the operational costs. That is not direct linked to, for example, a sale or a sales commission, because that's, of course, only if the sales occurs. So we're quite a risk-avert business, having covered more or less almost 85% of our cost already before the year starts. That's a good start of the year. And then we need some additional sales on top of that to be profitable, of course. Last thing I was going to touch was the next steps of FormPipe. Yeah, we have seen the thing I mentioned about SAAS and the Microsoft gaining market share in the ERP sector with Dynamics. They also have CRM in the Dynamics, so Dynamic portfolio in its full is gaining market share. And we have a strong partnership with Microsoft, and we support their journey, and we have products that support making their offering in the cloud even better. Lasernet is one of those products, long-term archive is another, quality control is the third, that we see good sales potential on just plugging on top of the Microsoft journey. We've had, up to 2018, different private sector business units in FormPipe. What we decided to do was to see, can we utilize these resources better? Yes, we can. We thereby made a business area out of them, and we have refocused all resources within those business units in order to support the journey with Microsoft, with Lasernet in Azure. That's the name and stand of Microsoft Cloud. Making it possible to refocus our best resources to do their job on markets where we see good winning potential for our business, rather than fighting in areas where we have longer terms of converting deals and less good market position. And also adding on other offers as long-term archive and quality control, as I mentioned. Quality control, very useful, for example, scanning data in a company, whether or not they're violating GDPR, then quality control is very, very valuable. So that's the next step, and as you can hear, I believe a lot in the private sector initiative we have ongoing, while the other two business areas are solid and also growing and helping the digital society to improve with better solutions for citizens. So also very successfully. That's about what I had for now. Thank you.
Perfect. Thank you, Christian. I'll get right on to the questions. And if we start off by giving a broader perspective on the current market, especially in Sweden, the first half year of 2019 has been somewhat sluggish, mainly as a reflection of the delayed establishment of a Swedish government. Have you seen any sort of trends in the other direction now going into the second half of 2019, or what's your thinking around that?
Yeah, speaking about the election, I mean, I have always been, and I think I've told you, been of the impression that election should not impact our sales that much. I thought it was always a bad alibi for our salespeople not to sell. Now I've actually gone back and looked on data because I became quite worried with the trend in public sector during the last 3 quarters. And found that, yeah, the activity is way lower the following quarters in terms of published tenders after an election. So that was the last election, the election prior to that, and the election prior to that. The quarters not up to the election, but after the election are impacted negatively in terms of new tenders coming out in the market. And yes, we see now from early summer, and now there's higher activity in more published tenders again from the public sector right now. So we have good hopes that the business volumes will come back.
Thank you. And around the current cost base that you currently have, both in terms of current personnel and how much you're investing in R&D, etc., are you satisfied with those numbers, or do you feel like you need to enhance your R&D expenditures, etc.?
Well, to maintain the journey we can see in the numbers, I don't think we really need to increase cost. However, we are looking always to see, okay, we are on, as I tried to touch, we think we have reached a platform, 2018, where we can see that we have successfully improved our margins. Now we see that we are getting to decent software margins on EBITDA, and especially on EBITDA adjusted, and say, okay, how can we grow faster when the recurring revenue brings us to even higher margin? Than how high should we go in order not to jeopardize the future, and rather grow faster and sell more things on okay margins? So that might lead to that we find new initiatives, new things that we want to sell to our current customer base, and thereby spend a little bit more on R&D. I'm not sure I have it right now, but that might be a case. But then it will always be supported by more sales. We will still have a tight cost control and make sure that we have decent or good margins. So and on the other thing with that, we are still trying to push down our consultancy, meaning that means that we can reuse resources from that we can grow without hiring a lot. Having said that, it's hard to hire, and I think we continuously have 5 or 10 recruitments ongoing. That's just normal life for us. So.
And speaking about the consultancy business, it has been decreasing both in absolute numbers and as a percentage of revenues. Yeah. Where can we see FormPipe in a couple of years? Will it be 0 revenues, or what's your ambition?
Well, yeah, I would prefer 100% recurring revenue. We will not get to that. We will always need resources that, even if we have the end customer implementation done by partner, partners need technical support on a level that only the product company can give, and we need to support them with that. And the journey we see in front of us in the private sector, where we also will open up more geographies, most likely, or at least open up more partnerships in geographies, will require more support on technical terms, in terms that we will be able to charge for, meaning that we will get some consultancy revenue from that as well. But hopefully the growth of recurring revenue, the growth of recurring revenue will go faster, meaning that the level of recurring revenue compared to the total revenue will continue to increase. We will have more than 50% of our revenue will be recurring. The recurring revenue will grow faster than delivery and traditional license.
Yep. And some time ago, you signed an agreement with an insurance and bank organization on your long-term archive product. Was this product especially customized for this customer, and how long are the sales cycles for such an agreement?
Well, this is really interesting, because that's the first evidence that the reorganization we did and looking on how we can cross-sell our products in a more efficient way actually worked out well. We sold not only long-term archive, it was actually LaserNet and long-term archive we sold to that client. In a combination, in a bundle where they work together. We never done that before, and now with the new organization, private and public spoke to each other, came up with a proof of concept, and had a joint dialogue with that customer on how these two products would work together and sold that way. So it was the first evidence that what we're trying to create actually is working, and to cross-sell our products. So yeah.
And speaking of the reorganization, etc., into the private sector, has that developed as you had planned, or has it exceeded your expectations the first half of this year?
Well, it's a change journey, and it's a change journey for people, and a lot of people give their heart into one product, and then you tell them to go and put your heart in this product instead. It's the change journey, and not all people would love it. But as far as I can see, this goes way beyond above my expectations, and we really have a good collaboration mode in the company on this, and I see we're doing it very well. Yeah, so yeah, it goes as planned, but it will still take time, and I mean, we will not abandon anything. We'll just make sure that we put our focus on areas where we see better growth potential. That's all. So yeah.
Looks bright for the future. That was all questions from my half about.
Okay.
And I think this ends the final session for today, and we'll pick up it again tomorrow morning at 9 o'clock. And thank you everyone for participating today, and especially thank you to Christian.
Thank you.